Okay, we're going to do a little boiler mechanic economics. Boiler mechanic credit markets. So, interesting article from Business Insider, a real hack of a magazine, but they are actually sounding the alarm on the debt problem and why it's a problem. See, debt in the United States was not a problem when interest rates were low. But now that interest rates are high and not being artificially pushed down by the U.S. government, by the Fed, now that that's or the banking cartel, if you want to call it the Fed, now that debt being allowed to move in the direction of normalcy. Now debt's a problem, and anybody who understands how money works could have predicted this. But it's an interesting article we have here. Private debt levels they talk about. Really, private debt compared to other issues, private debt, the credit card debt and the mortgage debt among private individuals is a drop in the bucket. I mean, I think we're at, according to this, let me move Alexander Mercurius out of the way. According to this, we're at 1 trillion. 1 trillion in credit card debt. Really, to be honest, that's a drop in the bucket. I like this article though, by the way, because they show the FRED, the FRED, or the Federal Reserve charts, which are always good charts. Federal debt, okay, everybody knows we're at ridiculous levels of sovereign debt, and that becomes a problem when the U.S. government has to sell treasuries at 4 or 5% interest. I mean, it was easy for us to build up debt as a sovereign nation when the U.S. government was selling 10-year or 5-year treasuries at less than 1% interest. But once you start getting to the point where you have to give 5% interest to your bondholders, then it becomes a big problem. Corporate defaults. So this has been an issue for a while. Um, you have a lot of corporate defaults going on, and bankruptcies as well are also really on the rise. Um, and this is the one that's really alarming. So, what people don't realize is that a lot of the big banks and hedge funds and all these people that trade debt, trade collateralized loan obligations, and all this stuff, they're sitting they're sitting on a mountain of bad loans that are funding commercial real estate. And the commercial real estate is a problem on so many levels. Of course, most people know about the cities like San Francisco and LA and New York that are rotting from the inside out. And they have these huge office buildings that are just, sitting there vacant. And I just saw a story the other day of a San Francisco building that I think it sold for 40%, maybe 60, 40, 60. I don't remember which. of what they were asking. But underneath the actual commercial real estate sales problems, you have the underlying debt that's being traded between banks, being used as collateral. And these banks, they don't want this. They don't want this debt, and this is what they're talking about on point number four. And I just saw a video from Steve Van Meter and Jeff Snyder talking about this. The banks, they want to get rid of this debt, and it usually comes in the form of collateralized loan obligations, which is kind of similar to what happened in 2008 with the collateralized debt obligations. So basically, these banks are trading these collateralized. Basically, they put together a bunch of these commercial real estate loans into a package, and they trade them among each other, and they use them as collateral. They're sitting on all of this debt. That's their collateral. If that debt goes bad, they have no collateral, which is a big problem because collateral is what keeps the money flowing from one institution to another. Without collateral, the money there's then money freezes up. No one's going to want to loan money to each other. Okay, a bank, in order for one bank to loan money to another bank, they're going to demand collateral, and they're using these real estate they have been up until basically recently using these commercial real estate CLOs, which are collateralized loan obligations, which have a lot of commercial real estate assets within them. They're using these as collateral. Now they want to dump these, and they're having a hard time dumping these. They thought they were going to be able to dump these into the open market, and these banks are finding that no one wants to buy them. And when we talk about this, is where the real liquidity crisis can emerge because they're sitting on too much of this debt, and if they can't get rid of it, then they start to look at real insolvency problems. So a lot of people are saying, and I said this back in the beginning with Silicon Valley Bank. I said, at the time, Silicon Valley Bank was, not a big deal in and of itself. But I alluded as we went on that, I don't think this is the end of the problem of the banking crisis that started in March, simply because, it's very simple. The Federal Reserve, Janet Yellen, they said, this is it. The banking crisis is over. And as soon as they said that, I said, well, that must mean the banking crisis is not over. It's pretty simple logic, and it's pretty foolproof logic, if you ask me. And so this is the issue right here, is that there is a ton of this bad debt based upon shitty assets that no one wants to buy, which is the commercial real estate. And it's not just the office buildings in New York or in San Francisco or LA. It's the malls. It's just, there's just too much. I heard someone say this there, and it's true. There's just too much retail space out there right now. There's just way too much. And we can do with like 50% of the retail space we have now. So we have just a huge surplus of retail space. These businesses are slowly falling apart because they're not getting the business they used to get. And then, the properties sit vacant, and then they foreclose, and then the banks are left holding the bag. So we have a real problem with this commercial real estate. And my theory is that that's going to, not that the residential real estate market needs commercial real estate to trigger a collapse, but I think that the commercial real estate collapse may come first. Residential real estate is looking relatively resilient right now, but I think that commercial real estate collapse can bleed over into the residential real estate and cause just this general massive property collapse. Now, the question is, what is the government going to do? Are they going to bail out the banks? Are they going to try at least to bail out the real estate market? I'm sure they'll try, and if they do, is it going to work? So this commercial real estate problem people have been talking about for a long time, and it seems like, you know, the can's being kicked down the road, but there will be a reckoning. There's no way to stop this. Peter Schiff is on now. So I just wanted to make this quick video here. I just at this point I understand. I don't want to be too much of a doomer because I've learned not to underestimate the ability of the central planners or the government, the Fed Reserve, or whoever to kick the can down the road. I just think that we're reaching the end of the road. Uh, but I've never been right about that. I've said that before, and I've never been right about it. But you have Business Insider, which is a hack of a newspaper. Occasionally, they put out good articles occasionally, but generally speaking, they're shills, and they're really pointing out. I mean, really, the first few things like private debt is not. Private debt will affect consumer spending and stuff like that. But $1 trillion is a drop in the bucket. Corporate defaults are a bigger deal. And what they don't talk about here is bankruptcies, which is even, I think, worse. Let me see if I can pause it and find bankruptcies real quick. Yeah, bankruptcies are on the rise. As you can see here, this is like the aftermath of COVID. And, as the bailouts and all the stimulus trickles into the system, the bankruptcies go down as these companies get weeded out. But now you see bankruptcies are on the rise again. And this comes in at a time of unprecedented government spending. So if bankruptcies are on the rise when government spending is out of control, as Fitch has said and Moody's has said, then that's not a good sign right there. So I'm just thinking that, things are not looking good. I'm not an expert at this. There's much better people out there than me. I'm just a boiler mechanic. I've been right before. I made some good forecasts on inflation as I predicted, and it's still early in this, but as I predicted, we failed to get below 3% on the CPI number, which is a fake number anyway. But we rose up to 3.2 this time. PPI was really hot, which is kind of like the leading indicator of inflation. So, what we saw the last few months really has been mostly attributed to base effects and oil prices. And we're going to see, I think, CPI creep back up. And we'll see where we go from there. But I just want to do a quick video because I haven't talked about economics and markets in a while. Futures. It's Sunday night. Let's go to finance. Futures are up slightly. And I wanted to talk. I don't know if I've talked about this before, but there's this whole there's still people out there talking about AI. Okay. And I've said it before. AI was this whole AI craze, which even in one of these Yahoo articles here, they actually call it an AI craze. So they're admitting that it's basically, yeah, here we go. This guy there. So here's some tip ranks aggregated by Yahoo Finance, trying to promote AI. But here they're saying, which is amazing, they're calling it the AI craze. So boosted by the AI craze, blah, 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 tech stocks did well, et cetera, et cetera. So they're admitting here, or they're, tacitly or subconsciously admitting that this is a hysteria. What's a synonym for a craze? Hysteria. And, I started hearing about this from a friend who was very, very susceptible to propaganda, and he just could not stop talking about, this Chat GPT. That was like back in November, and I'm like, what is going on with this? And looking back at it, it was fucking brilliant. Google releases Chat GTP for free and gets the hype going. Later on, I think they start charging for it, by the way, which I don't know if that's been a successful product once they started charging for it. And it just starts this whole marketing hype. And next thing you know, every company, every Nvidia, all these companies, these tech companies, whose sole purpose, it seems like some of these tech companies, their sole purpose for existing is, capital gains off of stock increases. I mean, like they don't actually make solid products half the time. I mean, Apple has, and some of these companies, there's so many of these like fake companies that come out of nowhere, and they say they just put AI in the name of a product, and people just buy the fuck out of the stock. And whoever, the people that start the company, they end up, selling the stock. It's very simple. Well, I think that AI craze is over. I think it's reached its peak. I'm not hearing people talking about it as much. I just have this gut feeling. Just I feel it in the air. I don't feel people caring about AI so much. So I don't think there's much more steam left in this AI craze. I mean, they're going to try and keep it going. They're going to release articles like this, and they're going to do other marketing scams. But I think the AI craze is over. So as far as the market's concerned, given that, and given that this entire rally that we've seen for the last few months has been completely fueled by the AI craze, okay, given that, I would say that the market's reached its top. I mean, I'd be surprised if it gets to all-time highs. And I was really surprised when it didn't get to all-time highs a couple weeks ago. And now we're sitting at about 35,000. We haven't gotten over 36,000 yet. And we just can't get that little extra nudge to take it to all-time highs. So I think that's over. I think we're close to the top. If it gets over the all-time highs for a short time, that's possible. But it's possible that we never see the all-time highs. We never see the 36,000 in the Dow or whatever the S&P was. We will never see that again. Not anytime in the near future. So that's where I'm at with it. I am out. I'm going to watch Peter Schiff.